Welcome everyone, another episode of Back and Forth with Becker and Orr. Kevin and I are ready to go. We're going to have some fun today. We're going to talk about how do you determine when you're at the top of the bubble. We're also going to talk about markets, and you can see it on the bottom of the screen there. There's another lightning round saved for the end of the episode, so you want to stick around for that.
Perfect. That's exactly what we need to deal with. And as usual, please, if you want to see more of the videos that we've got for this, Financial 15 or anything else, go to our website at beckerorr.com, visit us on our YouTube channel, or like us on our Facebook page anytime you get the chance. Clint, what are we talking about first?
All right, let's start it off, that main topic there. How do you determine when you're at the top of the bubble? And the thesis here comes from Vanguard. They wrote an article that said asset bubbles, where to find them. Great article. I'd encourage you to go read that. In that article, they also mentioned Yale University's William Gutzman, and he did a research trying to pinpoint a bubble. And what he found, this is interesting, Kevin, he's looking at markets that double over a period of 1 to 3 years. So they doubled in that time period. And he said, all right, what's more likely? Is it going to double again? Or is it going to get cut in half? And what he found is actually more likely it'll double again over that time period. What are your thoughts on this?
Yeah, I mean, it's something that I guess we really don't see a lot of. I mean, when the last time this one, of course, we've seen already. It got cut in half. We've already doubled. So theoretically speaking, we should be good for the next little while. But we've seen this before where you had it in the tech rally that went back. You had the sort of the Great Recession. I mean, we can even go back to when you were talking about, Black Monday back in '87 for those of us that were still around watching at this point in time. But yeah, I mean, I can honestly see this because there's more up days than there is down days. And I mean, the studies that I've seen beforehand, if you take a look at a daily basis, it may be up or down 56 to 48% of the time. But I mean, on the other side, over a 20-year period, chances are you're going to be up no matter what. So that's sort of where I'm seeing this go. How about you?
Yeah, and I think it just proves the point that it's almost impossible to predict the top of a bubble. Very, very difficult. You can go back to the .com that you just mentioned. There were so many folks saying, oh, this is a bubble, and it just went on year after year after year. The gains kept getting higher and higher to the point people were talking about new economy, new economics, and we're just different way to value companies. And of course, that wasn't true, and eventually the bubble popped. But the idea that you can somehow pick the top, this research kind of just throws cold water on that, saying it's very impossible to do that. And it's important to note, though, in the research that was mentioned in that Vanguard article, they're talking about indexes for countries. They weren't talking about specific stocks or specific asset classes. They were talking about an overall country index. That is a little bit of a difference. If you looked at an individual company, you could see perhaps a shorter time frame there. But I think it just proves the point. Very difficult to predict the top of a bubble, almost impossible, and you have some research here to back that up. Moving on to what the markets are telling us here, Kevin. And this is the chart of 2020. I just picked a couple of companies here, but what you see on the screen is the 2020 performance of Tesla, which just got shot to the moon, Zoom, which is right up there, and then you see TD Bank, Suncor Energy. I'll call them more kind of old economic companies, and they had negative years in 2020. You fast forward to 2021, and that chart gets flipped. Suddenly Suncor's up, TD's up, and Zoom and Tesla are seeing negative traction in the first part of the year. What do you make of this?
Yeah, I mean, I think this goes along with a lot of the theory that's always been there before, is that the stock market is a leading indicator. It is not telling you where we are at this point in time. It's telling you supposedly where we should be. So if we take a look back at the run-up for Tesla, once we got into the pandemic, basically we didn't have a good clue as to what's going on, but they knew that tech was going to be running things for the next year. So that's why Tesla, that's why Zoom are up. And meanwhile, nobody's going to the banks because you're not outside. Nobody's using energy because they're, just for a theoretical thing, nobody's driving anywhere. They're staying home because you've been told for that. All of a sudden in November, we see that, wow, the lights go on. Pfizer, Moderna come out with 95% efficiency on their vaccines. World's going to open up again. Great. I don't need my electric car right now, or the company that it is. I don't need my Zoom video, but I got to go back to the bank. I got to start using energy again. So yeah, it's a leading indicator. It is telling us where we should be going as opposed to actually what's happening. So
it's the rotation, right? It's that rotation into the different sectors, right? You're seeing the rotation from the high-flying tech where everyone's locked down and we're going to need to use this tech. It's going to integrate into our lives. To suddenly the world's going to open back up. We need to prepare for that. There'll be more demand, more energy being used. We'll get back to people going to physical branches of the bank. We're going to see that old world kind of revive, so to speak. You've seen that rotation. And you're right. Key to note here, it moves before everything else tends to move. The stock market this rotation started happening back in the fall. We haven't even reopened yet, and you've already seen the stocks move. So it's telling us where things are going to go, right?
Well, and that's the exact point. And again, I mean, to me, it's sort of an old stodge. Again, I remember back in the tech bubble in 2000, it's all new economy, old economy is going to die. We're never going to use it again. Sort of the same thing that happened here. Oh, we're always going to be at Amazon. No, going back to retail. Well, I don't see that happening anymore. Hard to get rid of old economy no matter how hard you try. But yeah, leading indicator as we thought. So the markets will predict what's going on beforehand. So if we start to ever see that real slide, we may see what's going to go forward.
Yeah, and that's always the tricky part of the market. It is a leading indicator. It's investors trying to guess what's around the corner. So the movement happens before the actual event. So the rotation happens before the economy actually opens up. Doesn't mean investors are right. So if we get some data that shows
right.
the reopening is going to be delayed or it's not going to be as big as we thought, well, you could see a big change in these stocks. But if it goes according to expectations, then you'll likely see the trend continue here. I think that's the message to end on for that one, right?
I agree. So basically that takes us to the lightning round. Now we get the fun questions and everything else. I tell you what, I'm going to start off giving you a few of these, see what best you know, and figure out how we're going to deal with this. So if
I'm getting ready. All right, hit me with them.
You're all psyched and everything else. Okay, let's start off with an easy one. Basically, we'll talk about the financial system. The way things have been going recently, we've been seeing interest rates starting to move up while we've seen the bond rates going down. Will the 10-year U.S. Treasury break 2% before the end of the year?
Yes, but just barely. I don't think we're going to see 2.25. I don't think we're going to see 2.5. I think the U.S. Treasury might just get to 2, but I think there's two items there. There's kind of a psychological barrier for investors, or beyond 2% kind of gets a little worrying. Plus, I think you could see the central bank step in if it gets too high. So I think you might touch 2%, but not much beyond that.
Good. Well, if I go to something different, Texas has opened up 100%. Spring training is just on right now. Opening season's about 10 days away. They are going to have a packed house in Texas to watch the Rangers play the Jays. Is this a super spreader event?
How is it not? There's going to be, 40,000, 50,000 people there all in one spot? Like, they're saying there's going to be protocols in place. I just don't know how you can have that many people in one area and not be a super spreader event. So yes, a wholehearted yes. That's my answer.
Oh, perfect. Okay. Now let's deal with Tesla. We talked about it there. Tesla, Ford, GM. They are all basically car companies. But if you look at Tesla, it's always looked at as a tech company. Over the next few years, are car companies going to become tech companies, or is it the opposite? What's happening?
I think you're going to see a bit of both. Yeah, Tesla is being valued like it's a tech company. It still has actual production facilities, lots of fixed costs like all the other vehicle manufacturers, but it's being valued like a tech company. What we're seeing is Ford and GM are looking at that saying, hey, we want some of that. And they're starting to move electronic vehicles. They're starting to go all electric in some cases. So I think you're going to see Ford and GM be re-rated a little more like tech companies, and maybe Tesla comes down to earth a little bit. Maybe they meet in the middle. That's my response.
Yep. All right. Another one that I want to know. We usually don't deal with anything political, but I need to know. Will Trump and Biden run in 2024? Either one of them or none of them?
Biden, no. Trump, yes.
Ooh, no, I don't buy it. And the last question I want to do. You are definitely a streaming guy. Now, with the way things have gone, streaming just passed 1 billion people worldwide. Over the next 20 years, what happens to the public networks? Do we have CBS, NBC, and ABC anymore, or is it all gone?
Oh, I think it's going to be a slow, painful death for those networks. I can't see streaming disappearing. There's so many streaming networks out there. There's so many options right now. It's all on demand. I think that's clearly the way of the future, and I think it's going to be a very painful time for all those public broadcasters. Very
good. There's still sports, though.
Of course. Yeah, you can't get away from live entertainment. Entertainment. All right, let's switch the roles here. You're now in the hot seat. I got my questions ready to go here, Kevin.
I'm ready.
We're going to start off on the topic. We're still dealing with interest rates. We got the central bank here in Canada, the Bank of Canada, central bank in the U.S., the Federal Reserve. Bank of Canada or Federal Reserve, who raises rates first?
The way I'm looking at it, I think the U.S. Fed's going to raise first. And the reason is because I think they're going to have a bigger growth component going forward than we will. They're coming out of the vaccine faster. Because they're getting it, I think their economy is going to move. And I think the Fed's going to pull the trigger sooner than the Canadian government will, based on that alone.
All right, interest rates go up in the U.S. first. I like it. Next question, I'm playing to your base here, Kevin. This is a hockey question. Winnipeg
nice.
Jets, do they make the playoffs? Yes or no?
Yes. As much as I hate to say anything along these lines and jinx it, got that superstition thing because I'm a player myself, I believe they will. They have proven right now that they've done everything. A 2-game slide was nothing. They beat Vancouver last night. They've got the structure. And if they pick up a D-man, everything's going to work well. So, as always, go Jets, go.
If they don't make the playoffs, we'll have to come back to this tape. This will be it, right?
Yeah, we're getting rid of this.
All right. Well, question for COVID-19. They're starting to relax restrictions. Will Manitoba be in code orange by Easter? What do you think?
I believe we will. I think that we've seen the numbers come down enough. I think that we've had so much pent up demand since November. Everybody's been basically stuck where they are. You've had only families sitting at restaurants if you want, so they're not doing business. If the weather's getting warmer as it is, people want to go out and enjoy. So I believe that Code Orange will come, especially if we get vaccines. So I see it happening by Easter.
All right. Dollar-related question here. So far this year, Canadian dollar has been climbing. We've seen that on the back of some strength of the commodity, the strength of the Canadian economy. Right now, about 79 cents. Does it touch 85 cents this year?
Ooh, that's a tricky one. I'd like to say yes, but I'm going to say no, it's not going to. I think it'll come close. I think we'll get that 83, 84, but I just don't see 85 enough yet. I think the way materials are moving, the way energy is moving, that plays to our base in this country. And I think as we open the economy, we're going to see more of that. But I just don't see that 85 quite yet. Close, but no cigar.
All righty. Last one for you here. Donald Trump, he just announced they're going to have a new social media platform coming out, the Trump platform. Should Facebook be worried?
No. As much as I'd like to say they should, I mean, there is a conservative base that will always follow him no matter what. But Facebook is world renowned right now. So I just don't see people in Europe. I don't see the Chinese. I don't see any of the Asian markets really worried about whether Trump's talking on his platform or not. So yes, I think that there's going to be a movement and a switch for people to watch it, but nah, it's just not going to have enough bearing to deal with a big enough dent in Facebook's portfolio.
Yeah, Facebook, 2 billion people, global enterprise. Trump might not be able to put a dent in that. That's true. That's a good point. Well, if that's all the questions we got for today, but if you have another one we didn't answer or something else you want to talk to us about, please visit the website, chatwithclintonandkevin.com. There's a certain part of our website. You can throw us a question. We'd be happy to tackle it next time. Any parting words for folks, Kevin?
No, as I say, I mean, if you want something financial, please let us know. If you want something just off the cuff to see what our opinion is, we're more than happy to take a crack at it. Other than that, I think we've solved up most of what we want to do today. And until then, I'm done.
Take care.